Glove makers continued to extend their losses today, following the worst year-to-date sell-down last week, with Supermax Corp, Top Glove Corp, Kosan Rubber Industries and Hartalega Holdings appearing in Bursa Malaysia's top losers list. News that a vaccine would be available for mass production in months spooked glove bulls last week. Then, adding fuel to the selling, Maybank IB research highlighted the juxtaposition of glove makers' supernormal profits and the government's extremely challenging fiscal outlook. This, it said, raises the risk of windfall taxes being imposed on the sector, with an announcement likely to be made in the upcoming national budget in November. Maybank IB cited the example of the windfall tax that was imposed on the plantation sector in 1998 and a similar levy on the independent power producers in 2008, which was scrapped 1 month later. At 5 p.m, Top Glove was down 5.9% to 22 ringgit and 42 cent. Supermax fell 6.8% to 16 ringgit and 70 cent. Kosan slipped 5% to 13 ringgit and 68 cent, and Hartalega closed 2.9% lower at 15 ringgit and 56 cent. Meanwhile, Rubberex Corp Malaysia fell 6.1% to 4 ringgit 32 cent. Comfort Gloves tumbled 6.7% to 3 ringgit and 60 cent, and Care Plus Group ended the day 7.5% lower at 3 ringgit and 10 cent. Bursa Malaysia is said to be preparing measures to curb excessive speculation on share prices as individual investors boost stock trading volumes to a record. Citing an email response to questions, Bloomberg reports the bourse operator may begin sending market alerts to investors when there's excessive trading in a security and requiring them to make upfront payments on affected stocks via designated counters. It added that this doesn't necessarily mean the stock is involved in trade manipulation. In the email, Bursa said there is always a concern that investors are easily influenced by emotion and instinct that can leave them in a vulnerable position. This is why it wants to raise the level of financial literacy among Malaysians as it continues to drive more retail participation in the marketplace. According to Bloomberg, the measures will be imposed if excessive speculation or suspected manipulation continues after all other preemptive measures have been taken and the specified criteria for designated security is met. RAM Rating Services says this year's jobless rate may range from 4% to 4.5%, up from the baseline of 3% to 3.5%, due to the imposition of the Movement Control Order. According to the rating agency, the temporary pause in non-essential business activities had caused notable labour market weaknesses, with a disproportionate number of redundancies in the tourism-related and manufacturing sectors. Meanwhile, higher job losses in Kuala Lumpur, Selangor and Penang were recorded vis-a-vis national worker distribution. These states could also face setbacks from the dearth of tourism activities and business travellers amid a global lockdown. RAM says the recovery of Malaysia's non-essential and export-oriented sectors is instrumental in reducing the slack in the labour market. This will be crucial in the next few months as various incentives for businesses and households are set to expire in the fourth quarter of this year. While the manufacturing sector rebounded strongly in June, RAM says the services sector was still underperforming, with overall retail services capacity standing at 62% in June. Meanwhile, the capacity utilisation rates stand at just 40% for the construction sector and 65% for tourism and hospitality. Without strong job prospects, RAM expects private consumption to contract by 2.1% in 2020, instead of the 7% growth seen previously. LPI Capital saw a 9.4% hike in second quarter earnings to 77.4 million ringgit on the back of higher gross earned premium from its general insurance segment. Revenue improved by 3.3% to 399.6 million ringgit. The group declared a first interim dividend of 28 cents per share. For the first half of its financial year, net profit rose 5% to 155.3 million ringgit, while revenue rose 3.1% to 803.5 million ringgit. LPI chairman and founder Tan Sri Dr. Teh Hong Piao says Malaysia is making good progress in its fight against COVID-19. But there is still a high degree of uncertainty on global recovery as long as a vaccine is not available and the fear of a second wave of infections remains. LPI will stay vigilant for the rest of 2020 and focus on sustainable revenue streams, strengthening its risk management capabilities and intensifying prudent cost management measures. Megah Port Management, or MPM, the operator of Labuan Liberty Terminal, denied allegations that it has increased charges ever since taking over the management of the port in April. MPM is 51% owned by Straits Interlogistics. In a statement today, MPM Managing Director Tan Sri Muhammad Bakri Muhammad Zinin pointed out that while it would have made more sense to cut back on capex during the slowdown, MPM has done the complete opposite. Up until the end of July, he said it had invested 6.3 million ringgit in infrastructure improvements despite seeing a reduction of approximately 35% in cargo volume. In the statement, MPM also claimed it had made the first move to waive all wharfage and berthing charges in light of the COVID-19 pandemic's impact on its clients. It said it would only collect any charges after discussing the terms in the upcoming town hall session on August 28th.